Good morning, Ray. Are you on the call?
I am. Good morning, Blaise. How you doing?
I'm doing great. How are you? It's getting chilly here in Michigan, eh?
It is, especially on the lake. I'm feeling it already. The lake life is not as good in the fall, that's for sure.
Well, Ray, I appreciate you getting on our weekly call together, and was excited. I wanted to share some things with you about some new business loan guidelines that really generally fall under the SBA 7A program. And again, glad you're able to join me this morning.
Okay, great, perfect. Let's do it. I mean, I'm actually very interested in the 7A programs because I really focus on the non-traditional type of product, the more of the Wall Street product, but we have some clients coming to us that could probably really use this, and so it'd be nice to better understand it. Although I'll be pointing to you, it should be nice to better understand it so that I can answer some general questions. So why don't you just start and maybe help me understand, Blaise, what type of business loans are being funded and why?
Well, the number one loan funding today is the SBA 7A business loan. It's really because you don't need to own or buy the real estate to get your business loan approved. It is a business loan for people who do not own their real estate. And there's a couple reasons why it's the largest volume government loan being funded today. Number one is it's got great loan amounts, which we can get into later, but the minimum loan amount is $250,000, and that allows a lot of different businesses, a lot of different franchise owners who don't own their real estate to qualify for these loans at really phenomenal rates. I mean, today rates are like prime plus 2 to 300 basis points, so puts you around 6%. So it takes care of a lot of different needs.
That's interesting, and you've said it like twice, but I want to make sure I'm understanding you. So you're saying that there's an SBA program out there that does not need real estate to back it up?
That's right. The SBA 504, where you can go up to a $5 million loan amount, that's where you do own your real estate, and as you know, our firm's able to do that also. But the one I'm really wanting to talk about today is that SBA 7A, and yes, that's, you lease. Like right now, one of the deals we have in process is a driving range and putt-putt center, and they've leased the real estate from the city here in Oakland County. Not the county, but I don't want to give the city to protect our client's name, but they've leased the real estate from the city for 10 years, and the SBA 7A term is 10 years. That's the maximum they'll go out. And yeah, so, how do they base the loan? They're basing it on the business, on the fundamentals, meaning the financials of the business, and then the strength of the borrower, not the real estate at all.
Okay, so the SBA 7A is what I'd consider an old school loan, like they used to do in the past, based off of the business attributes, not necessarily the real estate. But let me ask, Blaise, I mean, no offense, but, if we're talking about an SBA government program, why would somebody want to go to Commercial Coach or you or Charlotte to do a deal like this? Why wouldn't they just go to any bank? I've seen these signs in I've seen these signs in everybody's window, credit unions to regular banks.
Yeah, it's a great question. It's probably the number one question I get. People say, I appreciate your advice, but why wouldn't I just go to the SBA sign that's in the local bank I drive by? And the answer is every SBA lender is not the same. The most important thing to do before you invest any of your time in preparing an SBA loan request is really to know who you're preparing the loan request for. And the reason is the lenders that are actually lending have a very specific appetite for the type of loan that they're willing to add to their balance sheet. They really know exactly these are the type of loans that we're willing to fund because they're performing well, because they're not defaulting. And the thing that's really interesting is that there's something called the Texas ratio, not to get too technical, but each bank has this Texas ratio, and when you do a business loan that's not secured by real estate, you're really just adding a debt to that bank's balance sheet. You're adding a liability to the balance sheet without a corresponding asset.
Okay.
So it really increases the liability to asset ratio, which is again called this Texas ratio, and the FDIC, like never before, is auditing every single bank in the country every single year. They're looking at the Texas ratio, and these banks do not want to be put on the FDIC's watch list for a bad bank. So it's not that they can't do SBA loans. If it says SBA in the window, I'm sure they can, but they might only do pizza franchises. They might not. They might only do pizza. They might only do food. Let's say pizza and Firehouse subs, etc. They might not want to do pro golf franchises, or I can't think of another franchise off the top of my head that's not a food place. But each bank has to follow what's working for them right now. They can't venture out and take risks. So again, it's the most important thing to do before people invest their time in preparing this SBA loan request, the SBA package. They've got to know which underwriter, which lender they're actually preparing it for. It, setting yourself up for an approval. So the key is know your lender before you prepare the loan request.
No, it's funny, Blaise, because I may get this more than our listeners, because this is very similar to the private equity world. Although there's thousands of private equity groups out there, each one focuses on a different specific type of asset for their portfolio, and it sounds like you're saying the same thing. So you really need to know which lenders focus on which assets so that you can help the client play the match game, basically, if I'm understanding you correctly.
Yeah, that's exactly right, and that's why I say, I don't live in the world of scarcity, and I really want to just get the information out to the people that we communicate with. And if they want to talk to the local bank, that's fine, but just understand what they're funding, why, I love working